welcome the Global CEO of JLL Hotels and Hospitality, Gilda Perez-Alvarado, and the Chairman and CEO of MCR Hotels, Tyler Morse, in conversation with Skift hospitality reporter Cameron Sperance.
Morning, Gilda. How's it going?
Hi, Cameron. Doing great. Thank you.
Thanks so much for joining us. I believe Tyler's going to join us in a few, but
great.
Let's get a head start and see where things stand right now in the recovery. Inflection point is a term that keeps batting around for the recovery. I reach out to you a lot to kind of read the tea leaves of what this might mean, especially here in the U.S. heading into the summer. China's typically been a little bit further ahead of the U.S. a little bit lagging behind, but the U.S. even saw higher occupancies than China earlier this month. So what does a busy summer mean for hospitality investors? I mean, should we view this now that any deals to be had for hotels are in the rearview mirror at this point?
That's an amazing question. It's a very relevant question. And the answer is yes, that is the case for some hotels, right? So I would say we're definitely in a more optimistic stage than we were prior. I think this is from an investor confidence perspective. This is the highest that we've tracked since the beginning of the pandemic. The markets that are doing exceptionally well continue to do even better. So those would be markets in the Sun Belt, the likes of Florida, for example. Those hotels, anything that is geared up to target that summer leisure traveler, they're honestly gonna hit it out of the park. And we're seeing the booking pace go up. The rates are actually probably in some hotels the highest they've ever been. Room revenues are definitely exceeding expectations. And, and the prior session, I was reading about one of the challenges being labor shortages. So one of the things that we're paying close attention to, Cameron, is yes, those hotels are doing exceptionally well, but are they fully staffed? Are they getting, is the expense side of the equation fully loaded in the P&L for us to really be able to measure what profitability will be and will look like in a normalized environment. But, just going back from a macro perspective, leisure business going gangbusters. Corporate, we're keeping an eye out. Every corporation that we've spoken to, I mean, they're getting ready to get their sales force out. They need to go and meet people physically. I think the Zoom and the technology is going to be an add-on, but everybody is mindful of getting on planes, trains, automobiles, and going to go meet their customers and other business. So there's enthusiasm around that. And then last but not least, I would say the last leg of the stool, group business. We were speaking with a very big group house yesterday, and what they were telling us is that actually room revenue and room rate in their books going forward are higher now than they were in 19. So slowly things are picking up, and I would use this definitely as the bellwether for what is to come in other markets once they start opening up, be it Europe in particular. But yes, all lights are blinking green. And the big question mark that we're focused on is on the expense or cost side of the equation for any and all of these hotels.
Definitely. And you made a couple of points I just want to follow up on. I mean, the idea of the recovery path. I mean, I feel like everyone a year ago was rallying around the idea leisure travel would come back first. There he is. Hey, Tyler, how's it going?
Hey, Cameron, sorry about that. Technical difficulties. Hey, Gilda.
Hey.
Happy to have you here. Thanks for joining us. You're hopping in at a good point. Gilda was talking to us about just kind of what she's seeing as far as the recovery trajectory. And, earlier in the pandemic, we were rallying around this idea that leisure is going to come back first, then business transient, then group and conventions. But in recent months, you've had various hotel CEOs. I think Hyatt's Mark Hoplamazian was the most vocal, saying he actually thinks that convention and group could hopscotch into second place. I mean, is that something y'all are seeing? Tyler, why don't we start with you here?
Sure. Well, I'll give you a few data points. I talked to a friend of mine this morning that was at MPI in Vegas, the Meeting Planners International Conference. And he said attendance was way higher than they thought it was going to be. And a lot of people are planning events and conferences. I was really excited to see last weekend they had the World of Concrete in Vegas, which is a huge concrete trade show. There were 30,000 attendees. Now, granted, they like Dimble and get it going at the World of Concrete, so they probably were not working from home as much as, say, office workers. I don't know that group and conference is going to jump ahead of business transient, but I might call them neck and neck. But I think Gilda was there. I had a hotel conference in Atlanta about 3 or 4 weeks ago. It's called the Hunter Conference, and 1,200 attendees were there. It was packed. It was wall to wall. And now New York, COVID's over. The governor announced it yesterday. California, COVID's over. So we're working through our no mask policy at all of our hotels as we speak this morning. Right. And so, the butterfly is coming out of the cocoon. And I think you're going to see a return to travel faster than you think. Now, that's generally domestic. That's exactly right. Yeah. International is still rough. I had breakfast with a guy on Wednesday or last Wednesday that came over from Germany. He had to get a special visa just to come to the United States. Right. They're trying to open the UK. It's not really happening. So this is a domestic story. So to the extent that group and corporate travel are international, that's going to be a while. So I think I would call domestic group could be pretty fast. Mm-hmm. If it's a big international conference, I think it's going to be a while.
Got it. So, international traveler is one thing. What about the international buyer? Foreign capital, when it comes to the U.S., typically only wants to be in the major U.S. city. Mm-hmm. But those are the markets that are recovering the slowest, at least to date. So, is that going to provide any investment opportunities to foreign buyers, or do they start to look even at new markets? Nashville and Austin have been honestly just as much of a success story as Miami, depending on the weekend you look at. So what can you tell us about foreign capital for hotels?
Absolutely. Great question. Listen, the appetite for foreigners to invest in the United States, it's at the highest it's ever been, right? When you take a step back and look at how the major global economies are recovering and what the expectation for growth is and what the new, let's call it, point of equilibrium will be, the United States fares the best. So the interest is there. The biggest handicap, though, as Tyler was saying, is the fact that we cannot get these investors to come to the US, and it's very difficult for them to buy property without seeing it. As it relates to the marketplace or to the markets that they're the most interested in, it's only, predominantly the gateway metros. It's whatever's in their walking path. They already have other investments there. They visit those cities for commercial, personal, whatever reasons. That's not to say that we will never see international investment go into, Nashville, for example. There is international investment actually going in there, but I would say the bulk of the foreign investment will continue to go to the New Yorks, to the Miamis, to the San Franciscos. And the interest is there. I would say there's way more pent-up demand now that we've seen in the past. And we're closely tracking things that incentivize that investment, right? So the price of oil is in a very positive trajectory. That means more funds. They need to diversify as well away from petrochemicals. So they will, in real estate bodes really well. The hotel sector, provides a really good growth story, recovery story. So we should be doing absolutely fine there. One of the markets that we're tracking very closely, Cameron, is we've seen a resurgence on part of the European investor looking to invest in the United States, particularly whether it's private or private investors or private equity groups out of the UK, who are very bullish in the US. The Middle Eastern investors continue to be there. And I would say the more bearish investors right now are probably those investors coming from Asia. But it doesn't mean that they're exiting the market, that there's no desire. It's just, it's very difficult for them to make a very big acquisition if they're not here in person. They can't see the hotel. One of the consequences that we've seen as a result of their inability to come and travel is they have been deploying capital indirectly into a lot of these very big US funds, right? So that the capital is still flowing into the US, but you maybe don't see them buying the asset outright. You will see them being major investors in private equity funds in particular that are actually right now buying assets.
I think Gilda's right. I would add to that that the savvy foreign buyers are buying in the non-New York markets because of cash flow, and they're doing it in portfolios. So the highest performing asset class in probably the past 10 years, not just COVID, has been extended stay.
That's right.
And select service, right? There'll always be trophy buyers for stuff like the St. Regis, but the smart foreign capital is buying on a portfolio basis, and you're naturally diversified when you buy on a portfolio basis as well. You're not making a big bet on Nashville. You can make a bet on Nashville, Austin, Denver, San Francisco, Phoenix, Miami, all at the same time, right? So,
and that's a great point, Tyler. I would say you're 100% right on. It's the bookends that is the most interesting right now. So let's really go into the real efficient, newer economy sector, select service. Extended stay proved to be a darling class. And then on the opposite end, you use that to balance your more trophy, wealth preservation, iconic type purchases. It's the stuff in the middle that is hit or miss with a lot of these international investors.
Depends if you like cash.
That's right.
If you like making money on your investment, you focus on the former select service and extended stay. If you enjoy 0% yields, the big cities have your name written all over it.
And I mean, just as we came on the virtual stage, I got the SEC ping. It appears and this isn't necessarily foreign buyer led, but the Mammoth extended stay America deal appears to have closed today. So
congratulations to our friends.
So we have some poll results from the audience right now. What is the biggest challenge facing the hospitality sector right now? And the leading reply was uneven demand across the country and globe. I mean, I think that kind of plays into what you were saying about orders, et cetera, but any responses to this? Labor shortage?
I'm very focused on point B, and I want to hear it from Tyler, because you're focused more on operations real time as an owner than I am. But what do you think about this? We're seeing some P&Ls obviously that seem artificially high just because the fully loaded cost structure is not present in hotels right now. I know there's efficiencies. Obviously, we worked in a zero-based environment for the last several months, but going forward, what concerns you here? I'm very curious to get your thoughts.
A couple of things. One, it's very hard to hire people. We have about 4,000 employees. We probably have 600 or 700 open jobs that we are having a devil of a time filling. A big reason for that is unemployment. You're a 2-family working household. It doesn't make sense for one person to work and pay for childcare when you can be on unemployment. So in theory, that goes away in September. We'll see that certainly contributing to this. Another factor on the labor side is a lot of people have left the industry. A good friend of mine runs one of the biggest conference and event businesses in the United States, and he estimates that 9,000 sales managers left the industry and are not coming back. So he's actually at a trade show right now, and he said the service is simply awful. And that's going to be a problem for a while because there is a learning curve and there is a talent component to this thing. On the flip side of that, housekeeping Stay over housekeeping has probably gone away. If you want your room cleaned every day, maybe you pay for it or you use points for it, or there's a variety of ways around that. But people got used to not having their room cleaned during COVID. You clean it at the beginning, you clean it at the end, but you may not clean it in the middle. That's certainly helping margins. But Hilda, margins might be better, but revenue's way off. Unless we're in, and this goes to point 4, and I think point 4 is driving more of this than anything else, because South Florida is killing it.
It's amazing. Yeah.
It's having its best year in the history of ever. It's kind of like,
that's exactly right.
In 2020, golf had its greatest year in the history of golf. So did bicycle manufacturing. So did boat manufacturing. Like, leisure activities were off the charts. If you wanted to buy a pair of water skis last year, you were SOL. Couldn't do it. But if you were in the Rust Belt or in the Northeast, Boston hotels did terrible. Denver wasn't too far behind. Texas did okay. You kind of have to go market by market. And that's just domestically. Europe is, an unmitigated dumpster fire. It's just a basket case from a revenue standpoint. They're closed. You can't get across the border. You need the vaccine.
The governments have their hands full in that sense over there in Europe. They're on life support, artificial life support right now, obviously.
Tyler, on those jobs, how do you get those workers back? Is wage inflation inevitable, or do you just kind of accept that maybe those workers are permanently gone forever? And do you look for tech advancements or efficiencies to somehow compensate?
No, technology does not know how to dust. And technology cannot use a mop, right? And everybody thinks technology is magic. Technology is not going to solve any of these problems. It might make it 5% more efficient or something. But I'm a big believer, human beings as a species revert to the mean. 2 years from now, this will not be discussed. It won't be an issue. It will have sorted itself out. In some markets, you're going to have higher wage rates. In some markets, you won't. It does appear that they're opening up the southern borders to more immigrants. And if that's the case, that may keep wage rates down, but generally below the 40th parallel. Are they getting up to New York and Boston and DC? I don't know. We'll see. I think 2 years from now, it will not be an issue, but depending on what market you're in, there's going to be some systemic changes. And we're all just going to have to plow through and, kind of wait it out.
Yeah. And Cameron, one of the things that we're focused on as well is as it relates to consumer behavior, right? So if you look at who's traveling now, who's going to be traveling 2-3 years from now, 5 years from now, obviously there's a very big demographic shift happening. Let's see what behaviors are fully adopted from 2020, 2021 onward. But, I would be paying attention quite a bit to that generational transition that is taking place. Even in the workplace right now, we're seeing it. There's 5 different generations of people working together. That is changing some of the dynamics. The other bit, just as it relates to hotel services, amenities, so on and so forth, there's a lot of services that have been discovered or deemed as either superfluous or just, not applicable anymore. Going forward, I wonder how consumer behavior is going to change that, what expectations are going to be like. And then the other topic that you and I have spent quite a bit of time speaking about for the last several months, ESG, right? And so how does sustainability play a part in the hotel services that are offered going forward? And what does that mean from an operating and cost structure as well? So there's many moving pieces, I would say, and I'm very curious to see what the new normal, the new equilibrium point looks like 2-3 years from now.
On that sustainability note, Gilda, obviously you and I have talked about kind of at the property level, single-use plastics and whether the pandemic really kind of offset those initiatives that were happening before the crisis emerged. But I mean, is there anything from like the investor community that might spearhead sustainability for the hotel world?
1,000,000%. And I tell you, yes, Europe is shut down, but they are the leaders right now at looking at sustainable investments. And we're tracking how much sustainable funds have been raised globally. It's about 2 trillion. The sustainable fundraising in Q1 of 2021 was at record levels, but it is being driven by Europeans first and foremost. So we were, just to give you an example, we were speaking to a sovereign wealth fund who doesn't really invest in hotels. And they were telling us that a very big portion of the portfolio does not meet their investment requirements or criteria anymore. So they're going to be looking to potentially dispose of that and then replace that with sustainable investments. The issue that we have now is that no one has identified or defined what sustainable investments mean, right? It's not been institutionalized. So everybody's got their own idea as to what it means, whether it's green, blue, societal, whatever it may be. But they are redefining what building services and investments are going to look like. And the US is taking notice. And I would say the leader in this so far has been Blackstone.
Got it.
Well, I hear that. And I'll take a little bit of the opposite perspective on that, Gilda. Everybody talks about it. As a fund manager, I mean, I get the surveys from my LPs all the time. Mm-hmm. But they're not willing to give up returns for ESG. And I'll say this, consumers are materially worse. Consumers like to talk about ESG and sustainability and stuff, but they are not willing to pay a higher price for it.
And that's what we got to figure out. How do you turn that into profit? And there has to be a way. So I know me personally, I'm obsessed with proving that it is more profitable. But you're right, Tyler, it has not been done yet. So that's the biggest challenge that we all face. Well,
I'll give you a funny example. The New York State, I forget whether it's the state of the city, just passed a new law outlawing the little bottles in the shampoo. And they said you have to go to the bulk thing. That is environmentally worse. And I could walk you through all the reasons why, the waste, et cetera. It is just a perceived improvement on the little bottles. The greatest, everybody's outlawing plastic straws. But the consumer value just went down. Those paper straws, they don't really work. After you suck on it 5 times, it disintegrates in your mouth and it's really gross. So the world did not improve by using paper straws. The answer, unequivocally, is avocado pit straws.
Oh, interesting. I haven't seen those yet.
I don't know if you've seen this. They are amazing. They're made from avocado pits. They look and feel just like plastic straws. They're amazing. But they cost 9 times what a plastic straw does. So,
no straws going forward.
Opportunity for innovation. Y'all, I'm getting pinged that our time is winding out. I just want to ask a quick question for y'all to close on. I mean, summer travel is looking pretty good. I'm going to have to find some avocado pit straws going forward. But September's our next benchmark around the recovery. I mean, what happens when summer travel dissipates? And I mean, do you have any predictions for hotel recovery heading into fall? Tyler, let's start with you.
I think the fall is going to be gangbusters. Look, every airplane that's flying around right now is 100% full. Mm-hmm. The problem is there's not that many planes flying around. And it's tough to get a plane out of Victorville and back in service to Sydney again. That takes a long time. It takes a lot of governmental approval, et cetera. So that's not going to happen. I mean, the fall is now 10 weeks away. That's right around the corner. So I think international travel is still going to be slow, but I think domestic is going to be a veritable bonanza. And it's revenge travel. People want to get out there and hit the road again and go see their customers and see their families and their loved ones. And they're actually willing to pay up a bit for it. So, they're not going to fill all the rooms in a market, but they are willing to pay for a high quality product because they save money on well, they're getting their face ripped off on rental cars. Airplane tickets are pretty expensive, but hotels, relatively speaking, are modestly costs.
Good. Hilda,
And
quick.
Cameron, I leave you with my 5 seconds. I think business travel is getting completely underestimated. And come September, it's going to be crazy. I can tell you just based on our intentions as a corporation, the revenge corporate travel is here. It will happen. It will stay. Companies have to grow. So we better be visiting our clients going forward.
Listen, I think the CEO of Morgan Stanley said it great yesterday. He said, if you can go to a restaurant in New York City, you can go to the office. Get your ass back to work. Right? And I think he just came around and said it. Good for him. Nobody else is willing to say that kind of thing. And I think you're going to see that in spades as we move into the fall.
Definitely. All right, y'all. Well, thank you so much for coming today.
Thank you.
I really appreciate it. Chat soon, I'm sure.
Great talking to you.